Episode 5: How to Build and Protect Your Credit Score. Welcome back to the Money Glow Up. I'm your host Ella Monroe. We are on episode 5, and if you have been here from the beginning, I want you to take a moment and recognize something. You have already learned how to budget, how to get out of debt, how to start investing, and today we are adding one more powerful piece to your financial foundation. Today we are talking about your credit score. And I know what some of you might be thinking. Ella, my credit score is a mess. Or, I have no credit at all and I do not even know where to start. Or maybe you have decent credit but you have no idea how it actually works or how to make it better. Wherever you are starting from, this episode is for you. Because your credit score is one of the most important numbers in your financial life. And most people never truly understand it until it costs them thousands of dollars. Let's change that today. So what exactly is a credit score and why does it matter so much? Your credit score is a 3-digit number between 300 and 850. It tells lenders, banks, credit card companies, landlords, even some employers, how reliable you are with money. How likely you are to pay back what you borrow. The higher your score, the more trustworthy you appear. And the more trustworthy you appear, the better deals you get on everything that involves borrowing money. And here is why this matters more than most people realize. The difference between a good credit score and a bad credit score is not just whether you get approved for a loan. It is how much that loan costs you. Let me give you a real example. Say two people both want to buy a home and take out a $300,000 mortgage. Person A has an excellent credit score of 760. They get an interest rate of 6.5%. Their monthly payment is around $1,896. Person B has a poor credit score of 580. They get an interest rate of 8.5%. Their monthly payment is around $2,307. That is a difference of $411 every single month. Over a 30-year mortgage that is nearly $148,000 more, for the exact same house. Just because of a credit score. Your credit score is worth hundreds of thousands of dollars over your lifetime. That is not an exaggeration. That is math. So let's talk about how it actually works. Your credit score is made up of 5 factors. And knowing these 5 factors gives you the exact roadmap to building and protecting your score. Factor number 1 is payment history. This makes up 35% of your score. It is the single biggest factor. Every time you pay a bill on time, it helps your score. Every time you miss a payment, it hurts your score. And a missed payment can stay on your credit report for up to 7 years. The lesson here is simple. Pay every single bill on time. Every time. No exceptions. Set up autopay for at least the minimum payment on every account so you never accidentally miss one. Factor number 2 is credit utilization. This makes up 30% of your score. Credit utilization is how much of your available credit you are actually using. For example, if you have a credit card with a $1,000 limit and your balance is $500, your utilization is 50%. And that is hurting your score. The rule is to keep your utilization below 30%. Ideally below 10% for the best scores. So on a $1,000 limit, try to keep your balance under $100 when your statement closes. This is one of the fastest ways to raise your score. Pay down your credit card balances and watch your score go up. Factor number 3 is length of credit history. This makes up 15% of your score. The longer your accounts have been open, the better. This is why you should never close an old credit card even if you do not use it much. That old account is helping your score just by existing. If you have an old card sitting in a drawer, keep it open. Make one small purchase on it every few months to keep it active. And pay it off in full. That is it. Factor number 4 is credit mix. This makes up 10% of your score. Having different types of credit, a credit card, a car loan, a student loan, shows lenders you can manage different kinds of debt responsibly. You do not need to go out and open new accounts just for this. But it is good to understand that variety helps. Factor number 5 is new credit inquiries. This also makes up 10% of your score. Every time you apply for a new credit card or loan, the lender does what is called a hard inquiry on your credit. And each hard inquiry causes a small temporary dip in your score. The lesson here: do not apply for multiple credit cards or loans in a short period of time. Space out your applications and only apply for credit when you genuinely need it. Now let's talk about how to build your credit if you are starting from zero or rebuilding from a low score. The best first step for most people is a secured credit card. A secured credit card works like this. You deposit a small amount of money, usually $200 to $500, and that deposit becomes your credit limit. You use the card for small everyday purchases. And then you pay the full balance off every single month. The card issuer reports your on-time payments to the credit bureaus. And your score starts to build. After 6 to 12 months of consistent on-time payments, many secured cards will automatically upgrade you to a regular unsecured card and return your deposit. Look for secured cards from Discover, Capital One, or your local credit union. These are the most beginner-friendly options with low or no annual fees. The second strategy is to become an authorized user on someone else's account. If a family member or close friend has a credit card with a long history of on-time payments and a low balance, ask them to add you as an authorized user. Their positive history gets added to your credit report. You do not even have to use the card. Just being listed as an authorized user can give your score a meaningful boost. The third strategy is a credit builder loan. A credit builder loan is specifically designed to help people establish credit. You make monthly payments and the money is held in a savings account. When the loan is paid off, you get the money back. And all your on-time payments are reported to the credit bureaus the entire time. Many credit unions and online lenders offer these. They are a great tool if you cannot qualify for a regular credit card yet. The fourth strategy is Experian Boost. This is a free service that lets you add your regular monthly payments, like your phone bill, utility bills, and even some streaming services, to your Experian credit report. This can give your score an immediate boost without taking on any new debt at all. Now let me give you the habits that will protect your score once you have built it. Habit number 1, always pay on time. We said this already, but it bears repeating. Set up autopay. Put reminders in your phone. Do whatever it takes. One missed payment can drop your score by 50 to 100 points overnight. Habit number 2, keep your utilization low. Pay your credit card balance down before your statement closing date, not just the due date. The balance that gets reported to the bureaus is usually your statement balance. Keep it under 10% of your limit for the biggest positive impact. Habit number 3, do not close old accounts. Keep them open. Use them occasionally. Pay them off. Let them age. The length of your credit history is working in your favor every single day those accounts stay open. Habit number 4, check your credit report regularly for errors. Errors on credit reports are more common than most people think. And an error can drag your score down unfairly without you even knowing it. You are entitled to one free credit report from each of the 3 major bureaus every year at annualcreditreport.com. Check it. Look for accounts you do not recognize, incorrect balances, or late payments that were actually made on time. If you find an error, dispute it directly with the credit bureau. They are required by law to investigate. Habit number 5, use credit as a tool, not a lifeline. This is the mindset shift that changes everything. A credit card is not extra money. It is a tool. The people who master credit use their cards for everyday purchases, groceries, gas, subscriptions, and pay the full balance every single month. They never pay $1 of interest. They earn cash back and rewards. And their score climbs higher and higher over time. Use it like a debit card. Only spend what you already have in your bank account. Pay it off in full every month. That is the entire strategy. So here is your action plan for this week. Check your credit score for free right now using Credit Karma or the free tool through your bank. Know your number. Then check your credit utilization. If it is above 30%, make a plan to pay it down. Set up autopay on every account so you never miss a payment. If you have no credit yet, apply for a secured credit card or a credit builder loan to start building your history. And go to annualcreditreport.com and pull your free report to check for any errors. That is it. Simple steps, powerful results. Your credit score is not just a number. It is a financial tool that can save you hundreds of thousands of dollars over your lifetime when you use it correctly. And now you know exactly how. If this episode helped you, please drop a like and share it with someone who needs to hear this. And subscribe if you have not already, because next week we are getting into one of the most exciting topics on this channel: how to start a side hustle and turn your skills into real extra income. I'm Ella Monroe. This is the Money Glow Up. Financial freedom is a choice. Keep making yours. See you next week.